Give me my flowers, man. Give me my flowers. If I've helped you guys make money in the past few weeks, drop a flower emoji in the comments section below. I told you guys yesterday I was buying into NASDAQ calls right here, QQQ calls. I was buying into IWM calls right here. Things looked very bullish. Right at the morning, both of those plays were 50% each, and then through the day they were at least 100%. So in today's video, I'm expecting a bunch of flowers in the comments section below. I really appreciate all of the love and the kindness that I'm getting from everyone. It's really amazing that I'm helping so many people make a lot of money. And yeah, honestly, it's mind-boggling that all of these things are working and I'm in a position to help so many people. So in today's video, we're going to go over the stocks, the bonds, and the crypto market. If you guys enjoy my content, make sure to like, comment, subscribe. Definitely put on post notifications. Definitely do that. All right. So without further ado, let's get started with the video. So let's start off with the 30-year bond. So in yesterday's video, I was showing that the 30-year bond was bullish, and the first level of resistance would be this trend line here, which is the 20 exponential moving average. So you can see that it touched it exactly. Now the next level of resistance is going to be up here where these candles are basically, and you can still see that there's still potential more room to the upside on the 30-year bond, which means that there is still potential more room to go on the stock market currently. Okay, so now what that means is most likely going into tomorrow, unless the 30-year bond has a drastic reversal in price movement, the NASDAQ should be green tomorrow as well. And then once things get up to this level of resistance, if we fail, that is going to be a clear, decisive signal as to whether or not we will continue going up on the stock market, or if we fail at this resistance, the stock market can follow downwards right afterward. All right, so I mean, right now we're playing the 30-year bond movement literally perfectly. I've been calling these bottoms and tops, all of these, everything for the entire market for the past few weeks spectacularly. And if you've been following, I mean, I'm sure you've made tons of money as well. All in all, the 30-year bond looks bullish until proven otherwise. We need to see how it responds around 160.22. Next, let's take a look at the NASDAQ. The NASDAQ just looks absolutely gorgeous. I don't know what else there is to say here. We closed above a very important level of resistance at the 50% fib level at 366.55. We closed above that. We have been playing the markets like a fiddle, guys. A few weeks ago, we bought into 351 calls expiring in December. 351, guys. We caught the bottom of the NASDAQ right here. We got into 351 calls on October 4th. This is October 4th, guys. This is no joke. I do this for a living, guys. I make YouTube videos. That's fine. That's great. I do this for a living. The only thing that I'm not showing you guys is how much money I'm making from this. I'm not like people on YouTube where it's like, oh, you know, I think that we might go up. Oh, I think we might go. I put my money where my mouth is. I share all of my trades with you guys on Twitter for a reason. It's because I don't want to be greedy with the knowledge that I have. I'm not charging anyone for anything either. This is no joke, guys. I've been telling you this for quite some time. And you know, regardless, anyone that has been following has made tons of money. I've been getting so many messages recently, and it's just really beautiful and it's not overwhelming. It's just an amazing feeling that I'm able to help so many people. So yeah, I expect some flowers in the comments section down below. Anyway, the NASDAQ is showing extreme strength with the MACD. So a few days ago, we were falling on the MACD, right? But we completely, this is ridiculous strength, guys. Essentially, we just need to see now if the MACD can cross above this prior level here at around 189, essentially, right? So if we can cross above 189 on the MACD, that would be a very clear-cut signal that that was the bottom of the market, and we are going to continue on higher. But of course, that all really depends on the 30-year bond. But currently, in terms of equity price for the QQQ, it looks super, super bullish. You can see the RSI crossed above a very, very important level as well, and we're bull flagging. So this is very, very bullish on the RSI as well. We closed above a very important level of resistance here, and we tapped the 20 exponential moving average perfectly. I mean, guys, like, this is no joke. I mean, we alerted this yesterday as well. So I mean, I'm speechless. So the NASDAQ does look bullish, but there are tons of earnings coming out for tomorrow, and we need to see how the market closes for the week. Essentially, if we close above this high here at 365.69, that would be a very, very bullish signal. So essentially, just wait to see if we close above that level for tomorrow. All right, now let's take a look at the SPY and this beautiful inverted head and shoulders pattern that essentially worked out in the short term. All right, so at the moment, we crossed and closed above two very, very important levels of resistance. We broke out of the uptrend channel that we were monitoring as well. We closed above the 50% fib level at 439.84. Essentially, we closed well above 440, right? The next level of resistance is going to be 443, which is the 618% fib level. So if we can cross above that level, that would be very bullish. But now the only thing that is a bit worrisome is we are starting to get closer to the upper level of the B band. So as the upper level of the B band now begins to squeeze closer a bit, right, to the upside and to the downside, as price touches this level, it will most likely start to begin to act like a resistance. Okay, so what could end up happening is we will maybe travel up all the way to 447.55, right, and squeeze outside of the upper level of the B band a bit, right? But then at that point, what needs to happen is we need to consolidate, because as you know, when you are trading outside of the upper or the lower level of the B band, the price of the stock always likes to return to the mean. Okay, because algorithmically, the B bands are basically one standard deviation to the upside or the downside away from this median line, which is the 20 exponential moving average. So that's the only thing that is essentially worrisome for the SPY in the short term. And of course, obviously the 30-year bond falling, right? But all in all, this is just a very, very bullish move. Even if we retrace back down to this uptrend channel line and bounce off of this, that would still be extremely bullish. So yeah, just wait to see if 440 to 441 are retested tomorrow. And yeah, the main level of support for tomorrow is going to be around 440. Okay, so definitely keep your eyes on that. All right, let's take a look at the IWM, guys. I love trading the IWM because the moves are just so stupid and aggressive that the opportunity to make money on these are just, it's beautiful. I've made more money on the IWM than I have in any other indice combined, and I love it. So let's take a look at what the hell happened. Point you guys to the MACD down here, okay? So what happened is first of all, the IWM in general for the past few weeks has been the leader in terms of price. It's been doing better than the NASDAQ, and it's been doing better than the SPY. So yesterday, and you know, the past few days, we've consolidated in this area here, right? So while the NASDAQ and the SPY were really aggressive to the downside or etc., right? The IWM held above 220 very, very well. I'm sure if you've been watching my videos, 220 was a very, very important level of support, and we held it beautifully, right? The other thing is that the MACD here, this should have crossed down below. But the fact that we were falling so sharply these few days here, we fell very, very sharply. That should have caused the MACD to become oversold. But in yesterday's video, I told you guys that the fact that we came and held 220, the fact that this MACD line did not cross down below, and instead the price moved upward, I told you guys that was extremely bullish. So that's why we have a huge gap up move like this today, because all of these things combined, the consolidation, the 30-year bond increasing, the MACD just coiling up and really getting very tight like this you see here. All of those things led us to a huge pop today. All right, so moving forward, now what? So number one, the IWM is very close to the upper level of the B band. All right, so again, similar to the SPY, I was showing that if we did have one more green day, you know, we would be outside of the upper level of the B band, and then it's, you know, blah blah blah. Stock prices want to return back into the B bands. They don't want to trade outside of the upper or the level of the B bands. All right, so that's number one. We're close to the upper level of the B band now. Number two is we are also close to the 786% resistance level at 226.50. So those two levels of resistance are now very important. So if we cross above 226.50 with ridiculous strength, then this is going to turn out to be a very dramatic move to the upside, maybe. All right, you can see this is a huge bull flag formation. We've been coiling up and consolidating for quite some time, for the past few months now, the entire year actually. So if we can start showing some really decent strength, then the IWM leading, like I said, like my you know, my prediction for the rest of the year was that the IWM would be the leading indice. So if we start to really show some strength in the coming tomorrow and next week, that can really give a lot of space to the thesis that I have for this, right? So anyway, the IWM, two levels of resistance right above. Okay, so that's not a good sign. It means that we could see a downturn. The NASDAQ is also, you know, close to resistance. You could look at it in the bearish perspective. We're close to resistance, and the SPY is also nearing resistance. So there is some more room to the upside for the overall indices market, but now is definitely not a time to go long. You want to wait for dips. Okay, we went long down here. We're going long down here. Friggin' guys, we're going long down here. All right, so now, especially once like big movements happen, it's not the time to go long. You want to go long on red days near support, or on extremely strong days when we break resistance. Okay, so neither of those things happened currently. So essentially we just need to see what happens tomorrow, right? Overall in the stock market, I think we have another day of positive movement, but then earnings and everything are going to really, you know, it might cause volatility. So that's why I'm not going to really post that much tomorrow. I'm not going to post like huge, you know, risky swing plays, etc. We need to see how the market responds tomorrow. What I want to see is, of course, I want the market to always fall, because those are just amazing, safe, just amazing brain dead by the dip opportunities. I want the market to always fall, to be honest, because the Fed is helping me. The Fed is helping us, guys. The Fed is not going to begin tapering until at least the middle of November. So we have another month at least to have some fun and buy the dips on everything. So yeah, overall, that's my analysis of the stock market. Now let's go ahead and take a look at the crypto market. Alrighty, here is the crypto market, and Bitcoin is acting delicious. So you can see that there's resistance here at 57,600, 57,667, right? And that was, you know, this was a clear level of resistance. I didn't even add this line. This was a level of resistance from back here, right? So yeah, you can clearly see it's still acting as resistance, right? The MACD is oversold. The RSI is about to become overbought, but we're still moving upward. The upper level of the B band is very far away, which means that there's still tons more room to the upside. Okay, and you can see this is a clear, ridiculous uptrend here, and I would not go short on Bitcoin until we cross down below this uptrend level, and it doesn't look like that might happen. I mean, it could happen. We could fail at 59,000. We could fail right here. But overall, you know, Bitcoin is very strong. And if we do fail on Bitcoin, then Ethereum would just catch back up. Okay, so that's why we see Ethereum is having a very green day today, because Bitcoin is consolidating at this level of resistance. Okay, so you can see Bitcoin is only up 0.3%. Ethereum is up 4.5%. because Ethereum is catching up to where Bitcoin is. So you can see Bitcoin is trading right below the 1.68% fib level right here. Okay, if you use that same principle, Ethereum should be at around 4,400. Okay, but we're not. So there's tons more room to the upside for Ethereum, and even if Bitcoin does fall a bit and consolidate, that's still a very, very bullish signal. This consolidation after a huge move like this is bullish, and regardless, it'll give time for Ethereum and altcoins to catch up. So there's my analysis on the crypto market. I hope you guys enjoy the content that I post. Thank you so much for watching the video. Make sure to comment, subscribe, do all that good stuff, and I will see you guys tomorrow. Thank you so much. Have a great day.